Welcome back to Data and Context. I'm Allie Barefoot with Cotality. This episode is a part of a series where we break down Cotality's monthly home price index report. The U.S. housing market remains locked in a strategic holding pattern that has many buyers and sellers wondering who's going to blink first. Recent volatility and a surge in mortgage rates has disrupted seasonal momentum, completely reversing earlier affordability gains. But looking at a single national average doesn't give you the true story. 11 states are starting at a negative annual home price growth, while at the exact same time, a select group of powerhouse metros and undervalued tech hubs are experiencing a massive acceleration in price gains. To help us separate the signal from the noise and look past the broad averages, we're going to be talking with Cotality's chief economist, Dr. Selma Hepp, to help us unpack June's home price index report. Let's put the data into context. Selma, thank you so much for joining us here and helping us break down this report.
Hi, Allie. Thanks so much for having me back.
Of course, always happy to have you here, and want to just kind of jump into the first question because while the national annual rate looks flat, your team ran a 3-month look back that kind of tells a very different story, showing a 0.8% upswing since the start of the year. And even though that's technically below historical spring averages, it proves things are moving beneath the surface. Where are we seeing the most intense regional divides across the map right now?
Yeah, it's true. The national number is really masking a very split market right now, and especially the national annual numbers, which has been, slowing down and really suggesting that prices are essentially moving sideways. But we are seeing some movement underneath, and we're seeing some very different local story. Why it's important so much to look at home price 3-month momentum at this time of the year, because it illustrates what's happening with spring home buying season. And we generally do see home prices, even if there's no home price increase throughout the year, generally you will see some home prices firming up during the spring home buying season. Now, the 0.8% increase is slower than what historically we see. It's actually slowest that we've seen over the last few years as well. But again, there's a lot of differences, a lot of bifurcation across markets, and some markets are seeing significantly more than that, and some less. So when we look at the differences, the weakness is still mostly visible in parts of the South. Florida. We talk a lot about Florida, and also some previously fast appreciating market where affordability has been hit as a result of rapid increase in home prices. But when you look at some specifics, Cape Coral, for example, is once again showing a slowdown, and that market has been up and down. It's really trying to find itself, following a lot of disruptions that it has had. But also markets where we're seeing weakness this spring is, for example, Buffalo, New York, Washington, D.C., Fresno, California, for example. And this is really a cross-section of different housing markets in the U.S., where really the slowdown is for different reasons. Washington, D.C. has had a lot of challenges due to DOGE efforts, changes in employment. It's one of the top markets for declines in levels of employment. Fresno, California, for example, is very challenged in terms of affordability because the buyers there are really sensitive to rate increases. And you have Buffalo that actually did really well, over the course of last year. So it's now sort of hitting that affordability ceiling. So that's a challenge there. And then at the same time, you have markets that are significantly over the 0.8%. One market that really stands out this year is San Francisco in California, where home prices in this 3-month period have gone up as much as 7.8%. It's fastest appreciating market at the moment. And this is really the AI story, but there are other markets that are doing really well and appreciating is just as fast as a pace. For example, New York, New Jersey up 7.6%. You have Bridgeport, Connecticut 6.6%, but even Milwaukee up 5.1, or Salt Lake City up 2.1% in this 3-month period. So the takeaway I would say is that you don't have a broadly weakening, broadly strengthening housing market. It's really a story of local fundamentals that matter more.
Right, and it's following that story market to market and seeing what that local area is providing. And you mentioned Florida there, so let's talk about Florida for a minute because it continues to headline the national list for annual price corrections, specifically across the West Coast markets such as Cape Coral, like you mentioned, St. Petersburg, Northport, etc. But the June report reveals a fascinating twist, a spring bounce back that isn't hitting every city equally. What is the data signaling there, Selma?
Yeah, so Florida is a great example of why we need to look at more recent momentum in home prices, but also look beyond the state level data. At the annual level, many of the state's West Coast markets are still showing declines. Because they were among the first one to really absorb the shock of slower in migration, higher mortgage rates, rising insurance costs. That's a big story, and meaningful increase in inventory. So we did see a continuation of these annual declines, but some are firming up again. But what's more interesting actually is that parts of the east coast of Florida are relatively stronger in many ways, like Miami, Fort Lauderdale, West Palm Beach, where this spring appreciation is significantly stronger, the 0.8% national 3-month increase that we see. It's a story of a lot of things, but most importantly, in the east side of Florida is buyer composition. We have demographics and income levels that are really spurring that home price appreciation. We have folks continuing to move down from Northeast, and equity markets boosting a lot of that wealth creation, and that's helping firm up those prices. And even outside Cape Coral itself, some parts of West Coast of Florida, like Tampa, for example, is seeing a better 3-month momentum, in this recent spring home buying season than it was seeing over the course of last year. So, bounce back in a number of markets as well across Florida.
And we know that Florida isn't the only place experiencing a spring cooldown. When looking at the 3-month price changes through April, some massive metros took a step back. Like you mentioned, the New York City metro dropped 2.3%, Buffalo, another metro, fell 2.1%, and then Washington, D.C., which is usually always a very active area, declined 1.3%. Is this evidence that these markets have finally hit an affordability ceiling?
Yeah, like I said, earlier, I think it's a different story in a different market. And so some is affordability ceiling like Buffalo, New York, but some is a combination of, labor market and migration patterns that's impacting those markets. In Washington, D.C., for example, the increase, the slowdown in spring home buying season is very much a function of, relatively weaker labor market, but also a very rapid increase in inventory. We've seen some of the strongest increases in inventory over the course of last year in Washington, D.C., because, again, playing out some of the Doge impacts. In New York and Buffalo, for example, I think it's a bit of a short-term pullback that suggests a price discovery. Buffalo was appreciating a lot more over the course of last year, and New York too. New York has been, and areas surrounding New York have been really strong over the last year, and so you'll get to the point where there's, a reality check almost for potential buyers. So yes, affordability is clearly acting as a constraint, but could be other things playing out depending on the market.
Perhaps one of the most shocking data points for the entire report, at least in my opinion, comes from outside those top 100 metros. specifically in the Midwest industrial centers. Small towns are absolutely leading the pack. Elkhart, Indiana showed prices skyrocket by 13% over a 3 month period, and Kankakee, Illinois jumped 10%. So, what makes these small Midwestern towns such massive magnets for investment right now?
Yeah, so, Midwest story is really about relative affordability, meeting solid local fundamentals. In many of these smaller industrial markets, home prices are still low enough that buyers can absorb higher mortgage rates that we have today. Prices are significantly lower than, in coastal markets or Sunbelt markets. So Elkhart, for example, median home price there is $260,000. In Kankakee, median home prices is 213 roughly for a median price home. So this is really half of the national median price, which is over $400,000. So significant affordability in these markets. And then at the same time, you have these communities have relatively stable employment bases. They're tied to, manufacturing, logistics, healthcare, regional services, and in the labor data as of late, these have been the sectors that have been doing relatively better. So this combination is creating a compelling value proposition for homeowners, but also for investors. So investors are also increasingly interested in these markets because the rents and home prices are more in line with local incomes, which is maybe not the case in some of these really large, fast appreciating markets. And so it's really affordability again, and it's a renewed interest in markets where that were overlooked during the pandemic era boom, or just generally for a long time overlooked. The other thing is, remote work migration. The persistence of remote work has allowed folks that lived in urban or suburban communities to relocate to smaller rural communities and get more space for their monies, and so we do see that in a lot of these smaller affordable communities, they are gaining some of this migration from more expensive areas.
And to close things out here, Selma, let's look at the broader economic landscape. Given that we're seeing this clear split in opportunity where cash rich buyers are supercharging certain metros, and then you have rate sensitive buyers that are hitting a hard wall elsewhere, how do you expect this divergence to reshape local inventory levels as we move into the second half of this year?
Yeah, that's a great question, Allie. Inventory trends are shifting in a very important way. After several years of rising inventory, that growth in inventory has begun to slow, especially when you look at new listings. Active inventory may be building up because homes are sitting on the market longer, but the flow of new listings coming in is relatively actually slow for the time of the year that we are in. And again, the story is bifurcated, but what's to me most interesting at the moment is the markets that are most undersupplied, where we had really severely constrained inventories for a long time, and they were 40, 50, 60% below pre-pandemic levels, are now seeing those inventories thaw out, and the increases actually being larger than in markets that have seen build up in inventories over the course of the last couple of years. So I'm specifically thinking of these, again, Midwest, Northeast markets that have been so undersupplied, and now inventories coming online. And it's really encouraging buyers in these undersupplied markets to come off the sidelines. And then, that will help slow down appreciation in these markets that we saw they continue to be strongest appreciating markets. And then you have these Florida's, for example, Texas, Southeast, that have seen a lot of inventory increases. Now those increases are slowing, especially again with new listings, and that will help put floor under home prices and stabilize some of these slowdowns that we've seen in those markets.
Selma, this has always been very eye-opening. Thank you so much for joining us here to discuss Cotality's June Home Price Index report, and looking forward to seeing more reports come out month after month.
Thank you so much for having me, Allie. It was a pleasure talking to you.
Thank you again to Dr. Selma Hepp for joining us here on Data and Context, and thank you so much for listening. If you haven't already, go on ahead and hit subscribe on Cotality's YouTube channel, and as always, if you want to find out more information, head on over to cotality.com.